Good morning. It is good to be here today in Southland, holding our annual meeting at our oldest and our largest Fonterra site. My father-in-law was just telling me this morning that in his youth, he used to drop his cream cans off here at this site after he'd finished milking his 6 cows. It reminded me once again that although Fonterra was formed just over 12 years ago, our cooperative's history and values go back over 120 years. 2013 has been a year of promise, of challenges and of progress. It has tested the resilience of our farmer shareholders and our business, and the strength of our cooperative. Last December at the annual meeting, I spoke about my first year priorities as chair. They were payout from a well-executed strategy, world-class governance, and building a united Fonterra. Today I will discuss how we performed against those priorities, and then I will look ahead to the priorities for 2014. In the 2012-2013 financial year, we paid a cash payout of $6.16 to our 100% shared up farmers. That was comprised of a farm gate milk price of $5.84 per kilo of milk solids and a stable dividend of 32 cents per share. Whilst this payout was higher than our opening season forecast, it was 4% lower than the previous year. The top line numbers that contributed to this movement from the previous season's milk price of $6.08 kgs of milk solids to the $5.84 were an increase in average commodity prices over the previous year, which contributed 15 cents per kg of milk solids. Offsetting that was a 29-cent reduction arising from foreign exchange movements, with the US dollar average conversion rate increasing from 77 cents to 79.8 cents. Higher operating and capital costs also negatively impacted the milk price. The Fonterra board resolved to pay the milk price as determined by the milk price panel. The total milk price paid to farmers was $8.5 billion from the 1.463 billion kilograms of milk solids which were collected. That was down 2% on the previous year's production. Although we had record milk production in the first half, with volumes up 6%, the serious drought across most of the North Island meant a drop in production of 9% in the second half. That's roughly equal to 120,000 tonnes of whole milk powder, which was dropped out because of the drought. That drought also affected our co-op's earnings. The good performance in the first half was hit hard by the impact of market conditions in the second half. Just looking at the high-level numbers for 2012-2013, net profit after tax was $736 million, which was up 18%. Earnings per share was 44 cents, up 7%. Our debt-to-debt plus equity ratio of 39.6% reflected the strong balance sheet. This would have been approximately 36% if your co-op had not made the right decision to support farmers through the drought's immediate impact by raising their advance rate. This balance sheet strength enabled us to invest in $925 million worth of growth, which included, among others, completing our greenfield site in Darfield, acquiring the NZDL plant in South Canterbury, investing in our cream cheese plant in Te Rapa, and developing a new ingredients plant in the Netherlands in a partnership with the Aware Group. And Tao will run through the business performance in more detail shortly. During the year, the board updated the co-op's dividend policy. The policy states, the board seeks to maintain a consistent dividend stream in the normal course of events. This is expected to be between 65% to 75% of adjusted net profit after tax over time. This is important when you consider the significant volatility in global dairy markets. Fonterra has the balance sheet and cash flow strength to look through the volatility in the short term and ensure we are able to make judgments to protect the business over the longer term. At the same time, the board will always have the ultimate discretion as to the dividend when it sets it at the half and full year. The risk of looking at one point in time was shown clearly last year when New Zealand milk products earnings were $422 million for the first half and yet just $72 million in the second half. And that difference was just over that one date, the half-year date at the end of February. Like we do as farmers, Fonterra needs to look through the one-off financial year results to make longer-term decisions. Almost a year ago, we launched the Fonterra Shareholders Market and the Fund. 12 months on, trading amongst farmers is meeting its two goals of providing permanent stable capital for the cooperative and more flexibility in businesses. Our aim is to be able to provide solutions for our farmers as you move through these different stages. Milk is our lifeblood, and we will continue to work with farmers to provide solutions to ensure we retain and grow our milk supply, and we will continue to ramp up the work we are doing to support our farmers in meeting sustainability challenges. So my priorities are a payout from a very well executed strategy, solutions not problems. And importantly this year, it is ensuring everything we do ties back to our core values and the reasons we created Fonterra. These values are what anchor our cooperative. We must always hold true to them. The real focus for us now is to harness the power of our values, our capability and our commitment. 2013 has tested our resilience, but for myself and your board, the crucial measure is how we come out of the challenges of the year just gone. We have seen continuing demand from our customers globally, significant support for our brand, and our relationships around the world are very strong. And we've also received strong support from you, our farmers, and on behalf of your board, I want to thank you for that. It gives me real confidence that by holding true to our values, 2014 will be a very good year for our farmers and for our cooperative. Thank you.